All right, we're moving on from petty cash now. We're going to do a bank reconciliation. Oftentimes people just call it a bank rec. REC, bank rec. All right, here's a good template for you to use when you complete your bank recs. It'll guide you in what you need to do when you to balance. So here's the game plan. Our books, we might say we got $10,000 cash, and the bank might send us a bank statement saying, no, you got $9,000 in cash. That, you probably looked at that before. You've heard, maybe not you, but maybe you've heard people, go to the ATM and they print a little sheet of paper out and it says how much money they got in the bank. Like, okay, I got $300. They spend it and something bounces, right? Because they didn't really have $300 in the bank. The bank didn't know about certain things that you were spending money on. So there were still things yet to clear the bank. So you really had less than $300. That's just what the bank knew at that moment. What happens in business too. So the bank has a number, you have a number, and we need to reconcile them. Reconciliation, we need to reconcile them. So we start with two different numbers, what the bank says you have, what you say you have, and then at the end, at the bottom of this form where my mouse is, the numbers will be equal. Not close, equal. All right, we need to explain the differences between what the bank says we have and what we say we have. And by reconciling it, it's also a good quality internal control over cash. To always do the bank reconciliation, it's a good internal quality control. All right, we always know where our money is, and people know we're checking too. Because cash, as you've seen so far, is a heavily transacted account. A lot of transactions are running through cash. Very, very liquid, easy to take money. We want to make sure we have good internal controls over it. I'm going to move on. I'm just going to say, you see the ads, read through this and refer back. I might refer once or twice as we work through the next problem to this, just to show you how to use it. And eventually, hopefully, it'll be memorized. You'll have it close to memorized, or just instinctively. Practice, practice, practice. All right, I assume you've read problems, as you know I've just said in my videos, so I'm going to pause here and let you read the video. So hit pause, read the video, read the problem, and then resume play. All right, I assume you've paused and read the problem. Close. All right, so anyway, so Nolan Company has two balances, right? We got the bank and the cash balances. So the balance per books is $22,352, just like here, and the balance per bank is $21,332. And again, we get an email that contains, we won't get an email. We go to the bank website, we pull down the bank statement, or maybe we're old school still and they're mailing us the bank statement. I don't know, I don't care, but the bank always prepares an end of the month bank statement. Now it's not ready like July 31st, which we got coming up. This is July when I'm recording this. But a few days later it's ready. All right, so it'll be like end and balance for July 31st or December 31st, whatever the month end is, and we would also use the same date here. So we would look up the balance at the end of the day on the 31st, in other words. All right, so outstanding checks. That means we wrote a check and the bank doesn't know about it. Clearly, that's it. So what we do is deduct outstanding checks. And I said I'd refer back to this so you can see how it works. Deduct outstanding checks right there. So in the same spot even, deduct outstanding checks. B, the bank service statement includes a $41 debit memo for bank services. That is a bank fee. Bank fee. So we didn't know about it, but it's an expense that we didn't know about, and we need to reduce our balance, checkbook balance, on our books for that $41 fee. So B, deduct bank fee. Deduct bank fee on our formula sheet. Pretty cool, huh? All right, and it's letter B, so we could keep track of everything on here. C, in reviewing the bank statement, a $90 check written by the company was mistakenly recorded in the company books for $99. So it's supposed to be written for $90. We wrote down $99 on accident. So that means we actually have $9 more than we thought. We made an error. But it's in our favor. Oftentimes they're not. So it's in our favor. So it's a good thing. It's like finding money. So we get to add the error. Sometimes we subtract the error. So we get to add it. Now, I might have put it right here, but the formula sheet has it there, and I think I picked this up from the book. I'm going with the book on this, but I think I would have put it right there, C. All right, D, cash receipts of $47.24 placed in the night's deposit box. Y'all seen that. You're in the drive-thru at the bank, and they got the night deposit box on the side of the building, right? So what happens is, let's say it's Sunday, July 31st, because that's the one, the closest end of the month is the date of this recording, which is in 22. So it's Sunday, July 31st. Make a deposit at the close of business. Let's say that's like 9, 10 at night, right? Whatever. It's a retail store. Closing Sunday night late. You drop it off on the way home at the bank. All good, right? Well, it says June 30th here, right? So June 30th, same difference, whatever day that was. On the way home, you drop it off, but the bank's closed. That's the point. The bank's closed. And they're not going to say, oh, that money was here last night, right after we closed. We'll put it on June 30th. Nope. They're going to record it on July 1st. And some of y'all banks that have a sign in the lobby or however they notify you, any deposits made after 1 o'clock are credited the next day. So it didn't even have to be that night deposit box. They could have just made the deposit June 30th in the afternoon, right? And it's already basically July 1st there at the bank. Anything being deposited in is credited on July 1st. Either way, it's not on the June 30th bank statement. That's the bottom line, D, not there. So we need to add it because it's not included in this 21,332. That's the bottom line. 47.24 is added. And then the bank statement included $23 credit for interest on cash in the bank. We get to add that. We didn't know about that. Woohoo, good money. 23 and 9, we got, we picked up 23 and 9, but we had an expense of 41. All right, so anyway, we add up 22,352 plus 23 minus 41 plus 9, and you get 22,343. Now the goal is when you do the adjusted bank total, it will also be 22,343. So we start with 21,332. Add 47.24, subtract 37.13, and they equal 22.343. Good news. So every month in America, these recons are being done. Now the good news is, well, there's two levels of good news. One, computers do a lot of this now. It's even better. They have bots that do a lot of this now. Literally, they can run the program. Say the bank statement's ready. They can run the bots at night while everybody's gone and do the credit card recons, the cash statements, the bank statement recons, all the recons, receivables, everything. We're just looking at bank right now, so don't worry about the other things I said. I'm just trying to point out there's a lot of reconciliations going on. And walk in, and the bots might have said, couldn't finish, here's why. And they give you a red flag list. Or they might say, hey, things worked out pretty good, like this. I think a bot could have done this. So anyway, and it's reconciled. So there's some computer technology doing this for you. So if you're thinking, I don't know, counting. So then it would have taken a human to clear off the issues. Point being is things are being automated more and more, and the people that are going to be in accounting are going to need to understand what's going on. So if you're my take on the exams, and I hope you can tell, is I want you to know what's going on as much as your ability to be able to do it. Probably more so knowing. All right, so we've got a few things on the bank reconciliation that is not in our general journal and general ledger that need to be there. So we don't have interest revenue in there. We don't have a bank expense, bank fee, and we need to correct our error. So debit cash, credit interest revenue. Oh, I got it won't let me add it $23. I'll fix it before I'll repost the solution. So if you're looking at the solutions and you're like, no, that 23 is there, it's because I fixed it afterwards. Where it went. Bank expense fee, right? You could call it bank fees if you want. I don't really, when you go to work for a company, they're going to tell you their account titles. And, bank expense is what we're going to use. Bank fees are good too. So debit the expense, credit the cash. And then also, I think if I was to give you this on the test, I would give you more information. How do we know that that's accounts payable or not? But anyway, so here's just an example of what that entry could be to correct the error. We could debit cash. Again, so we need to add cash back. That's what we did here. We added cash back for sure. The credit, I think I've been a little more clear where it needed to be added back to. So we're going to add it back to accounts payable. It was $9 less, that company that paid the account on their account. All right, so what do we have here? Quick Study 612. What I'm going to ask you to do between now and the next video that you'll be watching for Chapter 6, if you could take a look at Quick Study 12, and I'm showing you solutions because I care more about learning how to get this problem work. There's plenty of practice coming up in the Connect assignment. So please take a peek at Quick Study 612, work it, and then we can look at the next video on Quick Study 612.